Hey friends, it's been a while, but I'm back, and not without a reason. Today marks the start of a new trading challenge, a powerful strategy with just $10 to begin. No fluff, only real trades and detailed analysis. I'll be using 3 classic indicators: Parabolic SAR, moving average, and Stochastic Oscillator. Next, we'll be using these settings for better signal filtering. Here we don't change anything, just the color, to make it more visible on the chart. For the moving average, we set it to YAMA with a period of 50. Color is up to you. For the stochastic we use K period 18, D period 7, and smoothing period 8. The May type will also be MA, and the colors will be as shown. And that's it. Indicators are ready. Now I'm switching to the 30-second time frame, but you can totally use the 1-minute one too. It doesn't make much of a difference with this strategy. Now let's get to the core, understanding the logic behind each indicator. Parabolic SAR shows the trend direction. When the dots are below the price, it indicates an uptrend. When they're above, it signals a downtrend. Moving averages help identify the overall market direction and filter out market noise. Stochastic Oscillator tells us whether the market is overbought or oversold. It's that final filter before I consider entering a trade. It will be even clearer with examples. So, I have $10 on my balance, and the expiration time will be 1 minute. Let's find the right currency pair. I see a signal for the first trade. We can clearly see a strong support level. The price bounced off it and started moving upward. Then it faced a resistance level, which caused a pullback. Now the price is heading back toward that resistance. Additional confirmation comes from the indicators. The parabolic SAR has shifted, the dots have started forming below the candles, which signals an upward trend. And most importantly, the stochastic has reversed from the oversold area and is now rising. We're seeing a bullish crossover, with the green line crossing the red one from below. All of this gives me enough confidence to open a call trade. If you also want to try trading, the link to the platform I use is in the channel description. You'll get a bonus when you sign up, so make sure to take advantage of that opportunity. And here's the result: how support, resistance, and indicators boost trading success. In this situation, I'm spotting a clear signal. The price has just made a strong bullish reversal after a sharp drop. The parabolic SAR has flipped. The dots have already formed below the candles, and so far, not a single dot has appeared above. The stochastic confirms this. Both lines have crossed and are rising sharply from the oversold zone. That's a solid reason to enter a long position. This trade worked out perfectly, just like I planned it. And you might be wondering about moving averages. By the way, in this strategy, I use it as an additional guide. It helps to see the overall market direction, but it's not part of the actual entry signal. This will be the third entry. The technical analysis worked flawlessly. A classic bounce occurred from the strong level of 0.92253, forming a local bottom. The parabolic SAR changed direction. The dots started forming below the price. This is the first signal of a reversal. Another confirmation came from the stochastic. It clearly exited the oversold zone, and the signal lines crossed. This setup indicates an incoming bullish impulse. It's a clear signal to go long. Another successful trade. This is a great example of how multiple confirmations can improve your win rate. Sitting this one out. Too much noise and not enough clarity in the price action. I spotted a good moment to enter on a pullback. If you look at the previous candle, it also had a pullback but closed bullish that indicates stable market sentiment. I believe we opened the trade from the best possible position. Also, what's especially important, it was a solid pullback from a strong level, and the Stochastic shows a line divergence, which indicates that the market is gaining strength. That's the fourth winning trade in a row. It's not about guessing. It's about making informed decisions. At first glance, the price should be going up. It bounced off the lower support level, but I'm opening a put trade instead. Why? Because the price tried to push higher but couldn't break through resistance, around 2.15600. You can clearly see how the candles are struggling around the moving average, a sign of selling pressure from above. On the Stochastic, the price is dropping from the overbought zone, with the red line already crossing the green one. Therefore, a short-term downward movement is more likely. Another successful trade. Let's find the next pair. I see a good opportunity to enter a put trade on this currency pair. The price had been rising for a while but eventually hit a strong resistance zone. You can clearly see the candles losing momentum. Each bullish candle closed lower than the previous one. The parabolic SAR has reversed. The dots are now above the price, which points to a decline. This view is further supported by the Stochastic, which has exited the overbought zone and is confidently heading downward, with the red line on top, confirming a bearish impulse. A put trade has been opened with confirmation from the resistance level, the SAR, and the Stochastic. This situation is somewhat similar to the previous one. We see an overall uptrend, and at first glance, everything looks fine. But as soon as you take a look at the Stochastic indicator, things become clear. It has dropped out of the overbought zone and is moving downward. The red line is noticeably above the green one, with a good distance between them. This time, I'm entering a trade based purely on the Stochastic. Trade closed in profit. Now let's look for the next currency pair. All right, this one's pretty obvious. We've got an uptrend. SAR confirms it, and Stochastic is pushing up from oversold with the green line leading. Solid buy signals. We've pushed the balance above $1,800. Let's open another trade with the full amount because the price hasn't reached its full potential yet and still has room to grow. And never rush into a trade. The key is to enter from the best possible position. It's all clear and simple here. The trend is downward. The red line on the Stochastic is crossing, and the parabolic SAR dots are positioned above the chart. Everything points to a downtrend. And you should always look at the history, how the price behaved in similar conditions. Patterns tend to repeat themselves, and if you spot them early, you increase your chances of making the right decision. I found a setup for a trade against the trend. You might ask, why go against the trend? It's simple. Just take a look at the Stochastic oscillator. It failed to break through the overbought level at 80 and started turning downward. Previously, the indicator repeatedly went above 80, confirming the strength of the upward momentum. But now, this is the first serious sign of weakness, suggesting a possible correction or even a trend reversal. That's exactly why I'm opening a trade down, despite the overall uptrend. Profited by a few points in the last seconds, even with weak movement, the chart still points down. I'm sticking to the plan and going short again. Profit again. No new entries here for now. I'm switching to a different currency pair. As mentioned before, the trend can go either way. So let's see what the next setup looks like. At this point, technically, everything checks out, but the price reaction at resistance raises doubts. The price could move lower, but I'm not ready to jump in just yet. Let's switch over and check another pair. Maybe there's a better setup waiting. Now this setup looks much more interesting. After a strong downtrend, the price reached a key support zone and reacted with a bullish move. The stochastic approached the overbought area, which triggered a small pullback. Right now, I'm expecting the price to continue upward after this correction. If it dips a bit lower, I'm ready to open a second position to reinforce my entry. But either way, the technical setup suggests an upward move is likely. The trade reversed in our favor at the very last second. You've seen how I approached the analysis and what I would have done if it ended in a loss. I'm entering a long trade despite the overall downtrend, because the price has tested the support level and shown a strong bounce from it. This could indicate the beginning of a correction or a short-term reversal to the upside. Looks like this trade is going to end at break-even. And that's totally fine. Turns out the downtrend was stronger than the support level. Every trade is a lesson. Let's use it to improve the next entries. I'm opening a position with $2,000, and it's also a good moment to recover from the previous trade. So, the US dollar and the Chinese yuan currency pair is entering a reversal phase after a prolonged downtrend. A strong support zone has held up perfectly. The first bounce gave us an early signal, and the second test confirmed that buyers are firmly defending the level. The stochastic oscillator also shows a clear reversal from the oversold area. And what's even more interesting is that on the second move down, the price didn't even reach the oversold territory. This suggests that bearish momentum is fading and bulls are gaining strength. The green stochastic line is rising confidently and pulling away from the red, a strong bullish signal. Parabolic SAR dots have also formed below the price. That's exactly why I opened a long position, a decision based on logic and confirmed by reliable indicators. So, that's the result. Let's keep moving. I haven't spotted a signal just yet. However, I want to tell you, if you value a systematic approach to the market, come be part of my Telegram community. That's where I share daily signals based on numbers, not on guesses. The link will be in the channel description. In this case, we're opening a position following the trend. The indicators are all good and confirm the setup. I'm using 2 trades in this setup. Take a look at the Stochastic. It stayed in the oversold zone for a long time, and then reversed upwards. The green line confidently crosses the red line. From below, a classic buy signal. Another important point, after a prolonged decline, the price formed a local bottom. You can see it with the naked eye. The price slowed down, and the candles began to form a potential reversal pattern. The parabolic SAR has already flipped its position. A strong support zone, signs of reversal, and matching indicators. This is no longer a coincidence, but a high probability profit point. One trade in profit, 1 in loss. I'm taking another position. This is typical. OTS sets are known for their volatility. On the euro to Japanese yen pair, I'm spotting a clear setup for a move down. The price has just hit a local high at 166.817 and started losing momentum. We can already see a series of lower highs forming. That's a sign the buyers are running out of steam. Parabolic SAR is flashing a reversal signal, and Stochastic backs it up. The green line crosses below the red. Both are pointing down and heading straight toward the oversold zone. This combination gives a strong confirmation that the downtrend is continuing. Great result. Just look at how well the levels and indicators work together. And if you found these insights useful, don't forget to like and subscribe so you don't miss future breakdowns. In this situation, I'm not fully confident, so I'm opening just 1 trade. We're entering against the main downtrend, but there are a few arguments in favor of a corrective upward move. First, the Stochastic indicator clearly shows an exit from the oversold zone. Second, there's been a sharp upward impulse, which often happens during corrections after a long drop. The trade looks reasonable, so let's see how it plays out. The trade didn't go through. The trend turned out to be strong. Well, I was prepared for that outcome too. I think this will be my final trade of the day. $8,000 on the Kenyan shilling to US dollar. This is one of those rare situations where the technical picture comes together perfectly. A strong upward impulse has reversed into a clear downtrend. I entered on the pullback. The entry point was excellent. The parabolic SAR shows a steady, bearish trend, and the Stochastic clearly exits the overbought zone. The lines are wide apart and pointing downward. This is a confident trade. All indicators suggest the trend is resuming its downward movement. Great results. Truly incredible. We turned $10 into over $22,000. It's a perfect example of how you can trade systematically and without emotions. And anyone can follow this path if you have a clear goal and the determination to stick with it. Start with a demo account, test the strategy, feel the process, and build your skills. If this video inspired you, don't forget to subscribe and stay connected. There's even more exciting content ahead. See you in the next video.